Guys, let's talk about what most traders will not tell you about. I'm talking about your mentors, your gurus, the people who you see that are making very big amounts of money in trading. They have so many things that they will not explain to you, and this is the things that differentiate you from them in terms of how much they can make in the market. You can see you and your mentor taking the same trade at the same time, but they are making more money than you do. The reason is because of the capital that they have in their trading account. And this is what differentiates you from them and the amount of money that you can make in a trade. For instance, let me cite an instance for you. Supposing your mentor or the person that whom you are following their signals, they have about $100,000 in their trading account, and you have maybe let's say 500 or 1,000 or maybe $200 in your account, and you are taking the same trade the same time, and you are targeting the same profit at the same time. For instance, when you enter a trade at the same time, if the trade moves about 20, 30 pips from the entry zone, you will see them that their trade is already in about thousands of dollars, while yours is still within 100. So the difference is because they have more balance than you in their trading account. And this is the reason why they can make more money than you do. So if you want to be a forex trader, I understand that it's very difficult for a lot of people to have this money to put in their trading. But the only thing you can do that will make you be more consistent is don't get too enticed by the things you see over the internet, because a lot of people that you see that are flaunting their wealth, they are flaunting whatever they are making in the market, they actually work their way to that level. So you also need to work your way slow and steady, beat the race, like they used to say. So you have to work your way up to that level. You have to be consistent with what you're making in trading. Supposing you have a $200, don't be too optimistic looking to flip that money in one trade or in one day. Be consistent and think in the long term, okay? Because in trading, is not about getting rich overnight. It's about a consistency in your trading pattern and in your trading style. Okay, you have to have a good strategy, and you have to understand that even if you don't have such a big balance to trade, you have to grow your account slow and steady. It's very important for you to withdraw some profit as well when you're making profit, because sometimes when you see that you are growing your account, let's say maybe from 500 and you already make 700 profit, making your account to be maybe 1,200, you have to withdraw some profit, because initially, you started your balance with 500 and you already make maybe 700 plus. Withdraw maybe 40, 50% of that profit. That way, you'll be able to have at least more leverage to your initial balance, and you already kept some money in your pocket or in your bank account. So, by doing so, you have to also be stable or be consistent with your lot size, because your lot size is very important. Some of the new traders don't understand what lot size really means, because you might be seeing a 0.01 or 0.02 or 0.05, not because those lot size are in cents means they are not very heavy when you put them in trade, because 1 cent actually can become something big when you enter the trade. If a 1 cent, supposing you are trading XAU USD, for instance, gold, and a 1 cent movement per pips is like $1. Okay. So when you see that a 1 cent, or maybe you are in a trade and it's moved against you for like 10 pips, 20 pips, you realize that already you're already losing maybe 20 to $10 to $20 in that pips. So you have to understand the number of pips or the number of lot size that you will be putting according to your account balance. Okay, so you have to make sure you stick to that plan, stick to that strategy, stick to that lot size and the positions. Even though you are using a lot size of 0.01, you also need to understand the number of position that each lot size is going to carry according to your trading capital. So if you have $100, for instance, and you're using 0.01 lot size, you have to use at least 2 to 3 positions to start up with. So the more you're making profit and adding to your balance, you can then increase your position, but don't increase your lot size, because the moment you increase your lot size, you are exposing yourself into more risk whenever a trade goes against you. So the difference between you and your mentor who are making so much money within a short pips is the account balance. So take note of that today, and don't try to chase money overnight. Don't try to get rich so quick trading. It's a consistency. You have to, it takes a lot of time. You have to grow in it. And moreover, you have to educate yourself about trading, because education is very important. Knowledge is very important. Regardless of what you do, you have to be educated. You have to understand that the knowledge you have in doing something will give you the experience. So it's very important for you to learn trading. Thank you very much, guys. I hope you enjoyed this video and you are able to learn something from this. I remain your favorite Payday King FX. Every day is a payday. Thank you.